Albertsons, a US grocery retailer which also operates pharmacies and fuel stations, a week ago announced its third quarter financial results. Stock price declined 6% to $16 per share, but quickly rebounded back to $17. In general, stock price has been under pressure in the past year, dropping by 16.7%. If we look at the price graph since Albertsons went public, we can see that only in 2022 the stock price has been trading significantly higher than it does now, but more on that later in the video. Let's have a closer look at Albertsons and see if there is value in investing, since market price is close to its all-time lows. Albertsons is a stable business from revenue perspective. Long-term revenue growth averages around 4% per year, and since it's a grocery retailer, profitability margins are thin in this industry. Operating profit margins fluctuate around 2.5% and net profit margins around 1.5%. We can see from the graph that in absolute values, net profit does fluctuate significantly year over year. More importantly, over the past 3 years, net profit is in a clear downward trend, decreasing from 1.7 billion to 870 million. According to Albertsons management, company is undergoing strategic transformation, which increased costs in the last couple of years. Albertsons is catching up with competitors like Walmart and Amazon Foods by beginning to deliver food to customers' homes. Albertsons is also remodeling their current physical stores and is refraining from opening new stores. Very important note here. Management expects that from 2026, their transformational efforts will begin to bear fruit and profits will improve. For the past 5 years, company has been paying dividends. On the current price of $17 per share, dividends amount to 3.5% yield. In the past year, company has also allocated an unusually high amount of $1.3 billion for share buybacks. Half of that money was used to buy back the shares from the market in the past quarter. This makes sense, because stock price has been lowest as of late. On the other hand, this move was risky, because Albertsons had to borrow additional capital to afford the buyback program. This additional borrowing increased its already high levels of debt. I see this debt level as the highest risk for Albertsons. There are several important things going on with Albertsons business and its future. First is that strategic transformation that I mentioned before. So far we only see increasing costs and shrinking profitability margins. Management says profitability will rebound in 2026, but until there's proof of that, market is not a believer. Secondly, remember when we looked at the price peak in 2022? Back then, even bigger grocery retailer, Kroger, wanted to acquire Albertsons, offering $34.1 per share for investors. This deal was broken up by regulatory commission, but currently there is an active lawsuit in which Albertsons is trying to get a $600 million deal breakup fee from Kroger. Trial is set for October of 2026. This is going to be a very interesting year for Albertsons, with potential for significant upside in stock price. Risks for downward pressure are mainly connected to high level of debt. When I value Albertsons business, I come up to a price of $28 per share, but the stock has not traded at those levels since Kroger merge deal collapsed. What we've seen since then is price hovering between $20 and $24. Momentum needs to shift significantly for Albertsons for its stock price to appreciate from the current levels of $17 per share to $28. Purely from business perspective, I can see per share returns delivering 9% annually on average for the next 5 years. At 3.5% dividend yield to that, at higher valuation compared to the current price, and we're looking at a pretty attractive investment opportunity here. I hope this analysis encourages you to do additional research before investing. In the meantime, I give Albertsons a bullish rating. If you have something to add, I would like to see your thoughts in the comments section below. Thank you for watching. If you found this analysis useful, and if you're looking for more investment ideas, subscribe to my channel. I'm Aurimas, and these were my insights. Stay curious, stay disciplined, and may your returns be strong.